Namaskar. Greetings, folks. Today is Monday, the 24th of March, 2025. Yesterday, I had an opportunity to attend a meeting of a group that I'm a member of. It's called the Active Investors Group, AIG, operates in UK, but has got members from India, the UK, and the United States of America. There are over 150 members in this group, but yesterday it was attended by just over 80 people. In this group, we help each other by sharing our perspectives on macroeconomic developments, information about industry, geographical markets, and specific stocks. By exchange of this information, we help each other making relatively better decisions. And it has demonstrated over a period of time that it is having a positive impact on people's trading and investment accounts. A lot of members in this group are also young aspiring investors at a very early stage of their trading and investment journey. For the benefit of these young aspiring investors, I was invited to give a high level talk on the role of technical analysis in our trading and investment. So, in this video, I'll present that talk to you. It was in a big hall, and there might be some issues with the echo and the acoustics. Please bear with that. But before I go to the video, a quick word of statutory disclaimer. The information being shared in this video is for educational and informational purposes only. It should not be construed as an investment advice. Individuals are encouraged to do their own research and assume full responsibility of any actions taken based on the suggestions provided.
So he made the first wrong introduction, calling me a guru. I'm a student, by the way. I started my journey in investing about 15 years ago. I make my living by working in IT sector, in digital transformation delivery space. So 15 years ago, partly out of laziness to go deep dive like Sandeep does, I tend towards understanding technical charts. And over the years, I have kind of got to a point where I can make out what the chart is trying to say. But I'm still learning, and I think there's a lot of talent and energy available in this room. We can expedite that learning further if some people were to join me in this process. When Jeet said to me that I've got 10 minutes to talk about technical analysis, I said, well, it will be impossible for me to do justice even to a small part of it. So I took the liberty of resetting a goal to say that, okay, even if I was able to arouse interest among the people here to start learning, that will be a big win. And that's what I'm going to attempt. So I'll be talking at a very high level. For some people, there are experts here in this room. Ram, for example, is a very good technical analyst himself. So I'll talk at a very high level. If you find it elementary, please do pardon me. First slide. So first of all, I think before we get into charts and understanding what the chart is trying to tell you, we need to understand that stock market is an auction market. Just imagine a room full of people with assets to sell and buy. So let's just concentrate on one stock. The amount of outstanding number of shares that are there in the market is limited, it's finite. Of that, some are locked away, like Sandeep buys something, he locks it away, right? So they are not available in the market for purchase. So there are buyers and sellers in the market. At the stock exchange, all of our orders are collected, whether we are trying to buy something or sell, they are collected and put through a software engine, which does the matching. So if you were to look at it, imagine like a stack of buy and sell orders. And I'm just oversimplifying it. It is aggregated in terms of quantity and price. A trade takes place only when there is a match between a buy and sell. Okay. So when there is a constant influx of these orders from buyers and sellers, willing buyers and sellers, if the buyers get desperate, they start raising the price to meet the sellers. And if the sellers get desperate, the converse happens. So that's how the price either goes up or down. The important thing to remember here is that for a trade to take place, there are two sides. There is one person buying, and you are buying it from someone who's selling it. What it means is that at that moment in time, there are two people having 180 degrees opposite views of that particular asset. Yes. And it's a very humbling experience to understand. So you know it because you're buying it, right, from someone. You know it. But to realize that and to internalize that information and to say, okay, I want to see the other's perspective as well is a very humbling experience. So try and understand why the other person is doing the opposite. Okay, so that you can see a 360-degree view of what's going on. So when a trade takes place, it creates what is called as a tick. Yeah? And there are millions of these ticks happening at any point in time, especially in those shares which are heavily traded. And that footprint of those ticks is represented in charts. Okay, whether you look at a line chart or most of us use a candlestick chart. So the basic unit of a chart is a bar kind of a thing. We call it candle because it looks like a candle. It's got a body and it's got a little wicks at both ends. What it represents is, in a given time frame, in this particular case, it represents day at the left-hand corner. So each candle represents the amount of business that took place in a day in terms of buy and sell. And each candle tells you what was the opening price, what was the closing price, and what was the highest and the lowest point. Okay, so that is the basic building block. When you look at the chart, it tells you a story. Like the people who follow the technical analysis, what they've done is they have studied charts for many years in different time frames and postulated a few things, researched them, and then come up with the theories that, okay, if you see a double top after a sustained price, and if the double top breaks, then there is a very high probability of it going down. So why the technical analysis works? I think there are two or three fundamental things about why it works. The number one is that the technical analyst believes, there is a belief that everything that is to be known about a particular share at that point in time is already priced in. Okay, so if Tesla is priced at whatever 220 today, at this moment in time, everything that is to be known about Tesla, the fundamentals, the fears, the aspirations, everything is already priced in because there are people pulling it from both directions, and the current price is the representation of true value at that moment in time. So that is belief number one, that everything is already priced in. So a lazy person like me doesn't have to bother about the fundamentals. I can look at the price and say, oh, this must be the true value today, right? So that is number one. Second thing is, history tends to repeat itself, when it comes to looking at charts, and there is a reason for that. The reason is, there is always that recency bias in humans' mind, right? And they tend to look at the past to predict the future behavior. That then creates a collective volume of action. If 100 of us look at the same thing and we decide that it's going to behave in a particular way, and we take that action, that creates volume. So it kind of a little bit of self-fulfilling prophecy as well in this. Okay, the technical analysis creates a set of tools for you which helps you increase the probability of success. Over the years, I realized that no one tool is sufficient. You have to actually have a number of things in your toolkit, and fundamental analysis, understanding what you own, understanding the market, the macroeconomic situation, the product, about the company management, they are equally important. But what technical analysis gives you, it gives you a tool to help you when to buy, when is probably the best value to buy in the sort of short to medium term, and when you want to sell to either book some profits or maybe reduce your exposure. Okay, next slide please. So what does technical analysis involve? So it is basically study of charts to try and predict what the future entails. Now, if you look at a chart, you talk about various patterns and various indicators, etc. When you look at the past data, it is very easy to say, okay, I should have bought here and sold there. But we are at the right edge, and we have to take a decision at the right edge where there is nothing to the right side of the chart. In order to have an actionable information to take decision which is going to unfold in the future, it's a big thing. So you need to have a number of factors, a number of things that are in your favor. and technical analysis will help you with that. So in terms of understanding charts, there are many things. So you start with the smallest unit. If a particular type of candlestick is forming, that can tell you something about what the next move might be like. Okay, so at candlestick level, you can analyze. There are tens of different forms, which will say if there is a hammer, for example, after a downtrend, the next candle might be green, so you might want to buy there, or something like that. So there are postulates, theories, and there are conclusions. But do they work all the time? They don't. Okay, because if technical analysis was an exact science, there will be no market, because everybody will then do the same thing, and they will expect the same results. It doesn't work because there is human emotion involved about buying and selling decisions. So starting with candlestick patterns, so you need to understand if a candlestick is trying to tell you something, and by using that information, can you increase the probability of success of what you're trying to do. Then together candlesticks can form certain patterns. The simplest patterns are support and resistance, where you see if a price is kind of bouncing off a particular area every time it goes there, then you know that something is happening there. And it happens because at that point there is an imbalance between buyers and sellers, right? So that is why the support and resistances are created. They are created because of the imbalance between buyers and sellers. So you need to be able to understand that. Then there are trends. By a naked eye you can look at a chart and say whether it is an uptrend or a downtrend. But there are ways by which you can draw lines to say how the trend is going, and whether you want to play with the trend or you can go against it if it has gone too far. Why I say play against trend if it has gone too far is the propensity of prices to revert back to the mean, reversion to the mean. There is a theory that price will always try to go in a bend and always try and revert in a mean, whether it is going in a rising trend, downward trend, or a sideways trend. Then there are various types of chart patterns. When you put a lot of candles together, look at larger time frames. People have done a lot of studies. For example, there is something called a flag. If you have a sharp move and then a consolidation, so you get a picture like a pole and a little bit of consolidation, which forms like a flag. So the theory says that after a flag, there will be another move up. So if you miss the initial move, you could still join that. And I've seen these kind of things working at a lot of times, but then you have to again take into account whether other things are also on your side. We talked about head and shoulders, double tops, double bottoms. Then there are indicators. There are literally hundreds, if not thousands. I counted on my T212 platform itself. There are, I think, 110 indicators. What an indicator is, it's basically a mathematical calculation derived out of price. Okay, so for example, moving average. So moving average is average of last, let's say, 14 days of price. As you go to the next day, you leave the earliest day and move to the next. So include the latest day. So that's why it is called moving average. Now there are theories which says if the 50 moving average crosses 100 moving average, then you can go long, and so on and so forth. Now all these things, they look nice on charts, but when you have to take the decision, if the price has already done something, it's already too late, right? So some of these indicators, you can't over rely on these because they are calculated off the price, it is already lagging. So that is why they are called lagging indicators. But there are some things which can give you some information about what it might do, and it comes with a combination of factors. So I personally use something called RSI, which is Relative Strength Index, and I look at it alongside the price. So if it starts going against the price, so let's say price has been going down, and if RSI is not following the price, it starts going back up, then that gives me a forward indication that maybe the steam is running out of this particular downtrend, and likewise for the uptrend. So I did sell some of the Palantir because of that, and I was regretting later, but now no more.
When did you sell?
He will check on WhatsApp now.
Sorry?
When did you sell that?
I did post it.
Yeah.
Okay, so
So Jaideep ji, I am unable to stop myself to ask this question.
yeah.
What's your own personal experience in terms of following the charts? I mean, what is your success rate like?
That's why I'm trying to get the answer.
So I'll tell you, sir. So first few years, I accumulated a lot of losses, and I was doing the same thing. I think there is a lot to investing than just charts. Chart is just a tool. There is a whole lot of other things that go with it, which is your your risk appetite, how you're doing your position sizing. Like for example, if you've got two shares, right, Palantir and something else. 6 months back, if you had invested 90% of that in Palantir, you would be sitting on a big profit today. But if you had done 50-50 between Tesla and Palantir,
It's zero.
Palantir would have taken away your Tesla losses. So I think it depends on a lot of other factors. I think I've got to a point where I have learned some of those lessons, and now with the learnings from the likes of Sandeep, have a method by which I have probabilities on my side, and a longish period of time it is successful. And following him, I have also started posting my trading portfolio.
Good.
Thank you.
Yeah. Just a couple of more things before I end. Yeah. So how much analysis is enough? So I think my message here is that because there is so much available in all the platforms, the more analysis you do, you are likely to get confused. You will probably end up in an analysis paralysis stage. So my message to you is keep it simple, just master 2 or 3 things and just include that in your method and stick to those. Because having a chart which has got tons of stuff on it and you can't see the price, what's the point of it? Because price is the most important thing that you want to see. Okay, so I normally keep my charts very clean, just price, and I draw everything on it, whether it is trend lines or I do use some of the calculations because doing those calculations will otherwise take time. So in summary, I think these are the 3-4 things that I have learned, and I want you to also kind of appreciate that. That technical analysis is just one part of the overall puzzle. Okay, so it's a very useful tool, very important. I will never do any investment without it, but it is just a tool. Okay, just remember that it is not panacea for all your investment questions. It will not answer those. The biggest thing that I've learned is managing your risk, your portion size. So I had a period when I entered into a competition. Can you have 10 consecutive successful trades? I used to trade very frequently at that time, and I was one of the winners. So that 10-15 day period taught me a lot because I was so careful. Because when I got to 8 successive trades, if I lost the 9th, then I have to start all over again. So that taught me the value of discipline. On the 10th trade, I was not even taking the trades that I thought would definitely work. Yeah. So I think it is very important to have that discipline in your mind to pull the trigger only when you are 100% sure. Okay, so don't just jump in and out of the market. I think that's very important. Managing risk and exposure is very important. I have some certain set rules for myself that I'll not invest more than between 10 to 12% in any one particular stock. So sometimes you regret that because, again, this Palantir story, if I had invested more in it, I would have been sitting on more money, which I could invest now. But that also gives you the cover from risk, like Tesla, for example. You invest at the wrong time, it goes down 30% in value, then you lose that capability. So manage your risk and exposure well. Allow yourself time in the market. So this is another big learning for me. Trying to set a daily target is not for this market. That's punting, and serious investors don't do that. Make sure that you're not there for quick buck. Know your stock well. Do your research. Know what you own. The second last, create your own method. I think this is very important. You should be able to write down your investment plan or an approach. It should be that clear. you should be able to say in clear terms as to how much I'm going to invest in one stock, when will I buy it, when will I sell it, what conditions must be true for me to buy or sell it, and stick with it. You can't use a particular parameter or a technical indicator to buy and then not sell it when it goes against you. Okay, so because then you're breaking your own rules. So very, very important that you form your rules, set of rules, and you stick by that and allow the time to test it. Your account will show whether it is working or not, and then you can do a little bit of tweak. Last but not the least, one has to be very disciplined in this market. If you get off your plan, your indisciplined markets will punish you.
100%.
Absolutely.
Thanks a lot.
Hope you found this useful. If you like the contents of this channel, please like and subscribe, and also share it with others who might find it useful. Thank you. Namaskar. See you soon.